Hi traders, this is the Euro US dollar Forex market and running a series of blogs on the website at excellenceassured.com at the moment to give you a demonstration of the type of trades that we're using in one of our trading systems on our Forex course. And so we're using the 5-minute chart to demonstrate two specific type of trades. One is a breakout trade and the other is a pullback reversal trade. And we're running daily blogs just to show you that the market it repeats certain price action, it repeats certain patterns. And once you begin to understand these patterns, then you can take advantage of the opportunities that present on this Forex market. And it doesn't just apply to the Euro US dollar, it applies to all of the Forex markets. So if you're trading Forex, this is going to be useful to you. So what you can see in front of you is the pre-market action from the 27th of November. And you can see that we've established a range, and this is what we do every day. We establish where the overnight range has been. So the high of the range, this was Sunday, and this is today, this is Monday in the early hours. And you can see that the market had a high on the Sunday up here and a low down here, which was confirmed by these bars here. And the market's been trading within that range right up until, well, the end of the chart here on the right hand side is 8 o'clock, just about 8 o'clock this morning. So what we're looking for is we're looking for breakout trades. What happens when the market breaks out higher or when the market breaks out lower? We're looking for those type of trades, and we're looking for specific signals that indicate that the breakout is likely or probable to be accepted and to be successful, to give us a successful trade. So specific signals. And we're also looking for what happens if the market breaks out and fails. Is it going to go higher again, or is it going to come back into the range? And we're looking for big bars, big green bullish bars, big red bearish bars. We're looking for these type of breakout bars to fail and then to give us a trend continuation trade. And I'll show you what I mean in a minute. So at the moment the market's trading within the overnight range. Now the overnight range is quite a large one. It's 30 pips, which is quite large for the Euro US dollar. Very often the overnight range is a lot smaller and narrower than that. You can see on the chart that we've got the 3 EMAs as well. We've got the 90 EMA, which is the golden line. We've got the red line, which is the 20 EMA, and the blue line, which price tends to hug, which is the 8 EMA. So that's the only indicator that we've got on the charts, and we're reading price action. We're reading price action to establish what's going on. We've got a couple of other important horizontal levels on the chart as well. We've got the 11,950 level here, which isn't drawn on, and also the 11,900 level, which is here. So let's have a look and see what happened during the day. And you can see that this is where we join it. This is 8 o'clock in the morning. This is the UK market open time, and price is in the middle of the trading range. It made its way straight up to the top of the range. And so in order for us to take a breakout trade, we're looking for specific signals at the high and at the low to take the trades. And we didn't get one here. The market just ploughed on upwards from the middle of the range, hardly a break, and then it failed. And one of the reasons that it failed is that it didn't have sufficient build-up in the candlesticks on the exit of the range at the top here. So that was a predictable fail, and the market came back down into the middle of the range. And you can see that what's happening here is that the 90 EMA here is it's almost seeming to support the price action and push it higher. And one bounce here came down, another bounce here. And the market is pushing up against the top of the trading range here, and it's been squeezed up by the 90 EMA on this particular occasion. And this is what the EMAs do. They tend to squeeze price action and then they burst out. So we got another breakout of the range here, and again, no specific build-up, nothing in the candlesticks here that indicate to us that this breakout is likely to be accepted. And don't forget that we've also got the 11,950 level here, which the market has to breach in order for us to potentially have a successful breakout trade. And there wasn't really anything in this particular price action on the breakout here that told us, yeah, this is going to be successful. So no trade for our particular system here. Now, one of the things that we're looking at on our trades is we're looking for what happens when a breakout fails and price pulls back to the EMAs, the 8 EMA and the 20 EMA, which tend to be the shorter term EMAs. What happens? What signals do we get? What price action do we get within the candlesticks that say in terms of a breakout and we're going to get higher price action? And one of the things that we're looking for is we're looking for doji bars within the price action, within the candlesticks. And the doji bars, in this particular occasion, the description that I use for them is very small bars in comparison to previous bars. So bars where you have an open and a close that are fairly close together, like this bar here has an open down here and a close here, very close together, and the next one which has an open up here and a close down here. So these are doji bars, they're pressing up against the 8 EMA. The 8 EMA, you can see it's pushing price higher here, pushing price higher and squeezing it up and above the 11,950 level here. Now what we're looking for is we're looking for two dojis together, and we got them here. We got one here and we got one here. And when we get a double doji pattern like this and it's right on the 8 exponential moving average following a breakout, then the chances are that you're going to get a breakout continuation or trend continuation and prices are going to go higher. So for this particular trade, you've also got a pin bar here with the pin sticking out below the 8 EMA. And what's happening here is that the bears are forcing price down, they're broken through the 8 EMA, and the bulls have said, no, that looks like a good price to me, I'm having more of that. And they're buying, and they closed this particular candlestick bar, this 5-minute candlestick bar, above the 8 EMA. That's a great sign. So when price pushes above this candlestick here, we can confidently enter a trade long. And stop goes below the doji candlestick here, and we're looking for a 2-to-1 reward to risk, which we just about got at 11,960 level. So that was the first trade of that particular type today, and we did get another one as well. In fact, we got two more. And what then happened is the price reached a high, wasn't convinced that it was going to stay above 11,950 round number level, and price came back down below it. Had another go at reaching a higher high, bearing in mind that we've had a run up, we've had a breakout, market's been making higher lows and higher highs, and then all of a sudden we have a failure. It's a failure to break out above this 11,950 level. It's a failure to make a new high, and the market's coming back down. And as soon as it breaks the trend line, mini trend line here, which has been formed, as soon as it breaks that, then everybody knows that the market's going down for a while. And you can see here that the bulls gave up trying to make a new high, and the bears went short. So we've got double pressure here, market's going down. This is the biggest candlestick bar on the chart. It's a big breakout bar, it's a breakout of the previous trend. And where does it break out to? Well, it breaks out down into the previous trading range. And so traders are looking at this and they're thinking, massive bear bar, there's going to be more downward action here, and they're waiting for an opportunity to get into the market. And what does the market present? Well, it does present another opportunity in the form of two doji bars. Now these aren't quite resting on the ATMA, so the risk is slightly higher in taking the trade, but this is such a big move, this is such a big bar that the chances are that any opportunity for bears to get in again and get short they're going to take, and these two doji bars offered that opportunity. Look what happened. The market pressed down, it closed below the 90 EMA, which is a great sign that the trend has changed from up to down. The market closed below the 90 EMA, pushed up above it, and this candlestick here, this doji bar here, actually touched the high of our range and it rejected. Had another go, higher, didn't quite reach the previous high here, and these are minuscule moves, but it's very, very important. And these two doji bars together, this second one fitting the whole bar, fitting inside the previous one, the market's in a period of indecision here, and when the market's in indecision and it's already shown its direction, its longer term direction, you know that there's a good probability that bears are going to capitalize on this and increase their stakes, enter new trades and take the market lower. So again, once the market goes below the low of these two dojis, which have got fairly similar lows, then we're entering a trade short. We're looking for a 2-to-1 reward to risk, and the stop is above the range high here, and the market came down, and it came down, and when the market comes down, the chances are that it's going to reach the bottom of this trading range here. And it took a couple of hours to get down to the bottom of the trading range. And you can see again that you've got a breakout here, a pullback, further downward action, a pullback. Where does it end? At the ATMA. Further downward action, and then a pullback. And as happens in trends, the pullbacks are getting deeper and deeper. Small pullback here, slightly bigger pullback here, just breached the ATMA here, further downward action, and then a deeper pullback. The market is still going down, and gradually the bears are having more of a battle to force prices lower. Again, another pullback here that actually breached the 20 EMA. So all of these pullbacks, it's possible to trade them, but we're looking for specific signals, and in this case we're looking for double dojis or pin bars that are resting against or really close to the ATMA, and they're the type of bars that we're looking for in order to get our good risk and reward trades. There's a possible double doji here. Didn't take this particular trade, but it did lead to more downward action. All of these there's a high probability when a market's in a trend, you get a pullback, you've had a big breakout, you get a pullback, there's a good probability that somewhere around these exponential moving averages, the market's going to have a trend continuation move. And these are all the type of moves that we're looking to capitalize on in this 5-minute trading system. So the market came down, and it's ended my trading day anyway, 6 PM UK time, right at the 11,900 level. So, hope you found that useful. If you're interested in learning to trade Forex, then our Forex training course has got lots of different systems to use on the daily time frame, the 1 hour, 4 hour time frames, and the shorter time frames like the 1 minute and the 5 minute charts as well. So, depending on the time that you want to spend at your computer trading every day, we've got solutions and systems for you to use. Hope you found that useful. My name's Anthony Beardsall. More on these type of trades at excellenceassured.com, and subscribe to this channel. Lots more of these type of videos on the way, and I'll catch you on the next one. Bye for now.